In this video, we are going to be analysing Beyond Meat, ticker BYND. If you want your own stock analysed, throw it in the comments and we'll get around to analysing it when we can. But to get straight into it, up around 2% on the day. Now, what is key is basically 2 days ago, they did drop their earnings. On this, we did get quite a push to the downside. As we can obviously see, we were sitting around $12, pushing now down to the low 10s. So what are going to be these key support and resistances and then going further? So for this, we will mainly be paying attention to our standard deviation channels. What we can see is on the off the earnings release, we broke our first deviation on the 6 month, which is at $11.07. So earnings dropped, we kind of came down, retested this level as a resistance, and then we continued down. When you see this, you tend to get a bit of trend continuation. So again, we have kind of tested that deviation, and now it looks like we would most likely continue down to the downside. And if we do, our next support is going to be around $8. So again, obviously, if we're holding it short, our stop would be probably above this $11, but we would have a target all the way down to 8 if we're looking for that downside target. And what is nice is we have already kind of snapped below that psychological $10 level. So if we did come back down to test that low, it'd be a lot easier to break it on that second move. And again, that is also a thing to be risk managed. If you're holding the stock long near that lows, maybe you want to be a bit more cautious if it comes down to retest that $10 support. So if we went any lower, we do have two more supports at about $5 and $3.80. So if we did continue low again, those are what we'll be paying attention to. But really, on a stock like Beyond Meat, which it has been a bit more bearish over the past 6 months and the overall 1 year, really I prefer to catch these stocks short bias. So if I'm holding it long, my absolute kind of final target would be around $14. I wouldn't look to hold it past that dollar because that is considered fair value on the stock. If we're more traders, again, it comes into more of a gambling territory once you go past that level. So if we broke that, I would be paying attention to around $17 to $18. That would be our first deviation between the 6 month and the 1 year. Really high probability that we start to pull back coming into this level. So again, the first time we come into it, from a trading perspective, looking to trade that short bias, moving stops to break even. So basically, yeah, if we came into this level, first time we touch it, looking to kind of touch this level, pull back, and then that's when we're on that pullback, locking some profits, moving our stops to break even. So even if it does come back to retest that level, again, we'll be fine. We'll be managed. We either have a small win on the trade or about break even. So then if it goes higher, then obviously waiting for the breakthrough, come back to test it as a support. And then if we bounce, we can come look for that next deviation or move, which would be $20. But in the other case, it did just continue down to continuing downtrending. We would have our target of around $14. And again, this is where I'd really be looking to lock in those profits and get out of that trade completely. So if we did break higher, like we said, we would be looking for that move to that next deviation, which in that case would be $20, then 23, and then 25 would be the key levels I'm paying attention to going higher. So those are the key support and resistances. Again, how I trade, I don't really care which direction it goes. The only thing I'll pay attention to is firstly, what is the 1 year trend? Is it downtrending? Is it uptrending? And again, that's why I like to have the 6 month, because if it's downtrending on the 1 year, but a clear uptrend on the 6 month, then again, you kind of get those mixed signals. And again, then maybe I reduce size. But in a case like this, where it's kind of a bit more flat on the year, I'm not too fussed whether I take the long or shorts. But considering we are near those 52-week lows, again, if I'm trading the lows, I'll be kind of a bit more risk managed, reducing size. But if a stock, and especially when you got those small cap stocks, the AMCs, the FUBOs, the MMAT, all these kind of small caps, when you can look at the chart and they're just a clear downtrend, obviously with those, we're going to prefer the short trades. Taking the long bias trades on those are going to be a lot risky because you're playing against the long-term trend and the fundamental kind of underlying of the company. Anyway, that is a breakdown on Beyond Meat. If you enjoyed the video, why not drop a like and subscribe? Like we said, if you want a stock analysed, throw it in the comments, we'll get around to it. And if you enjoyed the video, why not check out this one here.